Cause this ain't no dang joke. Cause if you opened up your Hungry Bowl app today, you probably said, what in the flippin' flapjack is going on out there? There is a whole lot of green. This market has flipped into complete capitulation mode on the other side, the buying side now. We've got a lot to discuss in today's video, guys, and I mean a lot, okay? I'm going to share some option moves I made first thing this morning in regards to several stocks I bought options in here today. We got to talk about exactly what's going on in this market because people are like, what in the world just happened? You know, it was like the market's been crashing and crashing and crashing, and all of a sudden we had a huge bounce back day on Friday. We have this ridiculous day here today where stocks are just going absolutely insane, and people are like, well, what is going on? Make sure you subscribe to the channel, guys. We got a drama market. That's all I got to say. This stock market is drama right now, and hey, it's making for some good content because drama periods are fun, okay? Now, first off, everybody needs to go buy an iPhone today. And the reason being is Apple saved the entire stock market, essentially. This stock single-handedly put the stock market on its back and saved this thing. This is the one that everybody, was looking at. And like, what's Apple going to do? Are they going to say anything about guidance? What supply chains? What are their past numbers? And they come in, they beat by $5 billion on revenue, which was just shocking, right? But more importantly than that, the most important thing that Apple said, essentially, and by the way, if you're wondering, what kind of happened here, well, Apple reported this great earnings on Thursday after the market close. So market moves up huge on Friday. Market continues that upward trajectory today, but today's even a more powerful move than essentially the past days because what happened was Netflix had reported earnings to start out the earnings season. And essentially, it was a disaster. And this was the moment. This was the moment where a lot of folks went ahead and they said, you know what? I don't think I want to be in this market anymore. I think I'm going to sell out. And so what happened is basically after Netflix reported into that next week, you saw a lot of people just flood out of this market left and right. The market had been rough. We had all these inflation fears, what the Fed's going to do. A lot of scary talk, right? A lot of scary talk. And then you get the first big tech earnings of them all, Netflix, and it's a disaster. The stock goes down 22%. It was the worst day for the stock since July of 2012. And a lot of people are like, I am done, man. And all of a sudden you saw people selling left and right out of this market. Boom, 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 boom. It was like a flood out, capitulation left and right? Then all of a sudden, very important, Microsoft comes in, last week, right? And Microsoft reports good earnings, right? Good earnings. Now, what did everybody say about this Microsoft earnings? They said, okay, that's a good data point, especially after the Netflix situation, but we want to see more than that, okay? We got to see more than Microsoft to make ourselves feel comfortable in this market. Okay, Microsoft held together, but we got to see more than that. Then Tesla comes in and knocks the door down, okay? And Tesla just came in and, had incredible earnings, like ridiculous. It even brought up their targets, and they still just crushed everything in sight. They beat everything I was even expecting for the company. It's incredible, right? And so then Tesla comes in, just knocks the doors off. So then everybody's like, okay, Tesla comes in, knocks the doors off. Elon Musk had a lot of good things to say on that conference call. Microsoft had really, really impressive numbers. So everybody's like, okay, maybe there's something here, but not quite yet. And then obviously the Apple earnings with the $5 billion beat, but even more important than a $5 billion beat was this right here. Shares rise after Tim Cook says supply chain improving. That was the most important line that the stock market has had in some time. Because what ended up happening was even in the past quarter, essentially, Apple reported, even they started to speak about supply chain crisis and how that was negatively affecting them. And so everybody was like, oh my gosh, supply chains are a mess. We got this messy inflation situation, the Fed, And then all of a sudden, finally, you get some good news where Tim Cook says the supply chain is improving. And so a lot of folks say, okay, the supply chain is starting to improve for Apple. It's likely going to start improving or is already starting to improve for everybody else, which that's been a holdback for a lot of companies. A lot of companies haven't been able to really put up the type of revenue growth they wanted to, earnings growth or anything, because if your supply chain's a mess, you can't get enough products out there, right? And if you can't get enough products out there, you can't do the type of numbers you want to do, and also that's something that ends up likely causing inflation because you basically can start having price surcharges and things like that, and surge pricing for different items, which can eat into your profitability. And so it's just a bad situation. So when a company like Apple comes out and says supply chain's improving, that's a huge sigh of relief for the entire stock market, right? And so that's when After you get Microsoft, after you get Tesla, and then you get Apple coming in, all of a sudden it starts to become like a far-fetched dream to imagine the market's going to go down much more, right? And that's when all of a sudden we see a huge move up in the stock market. Now, you take us back to this time last week, right? Obviously I've been buying super, super heavy while everybody was capitulation selling in this market. And we go back a week ago to this time, it was a panic sell in the market. It was pure capitulation. You look at the pricing activity, you look at it was just a flood out of stocks. By any means necessary, people are sell. They couldn't sell their stocks fast enough. It's like, I don't know if I've seen a market that bad, other than obviously the Roni Rona crash of March, started in February of 2020 into March of 2020. Outside of that, which that was a freak scenario, I haven't seen like a normal time period where we just had pure capitulation, like no end in sight. Stocks were down 10, 15, 20%. And then we're talking about a lot of these stocks had already been hammered 50% plus from 52-week highs. So it's not like they were high flying, then they finally got hit. They were already, devastated dogs laying on the ground, and then they just got kicked to the floor, right? It was nothing short of extraordinary. And essentially, Apple was the final straw that broke this market into out of this cycle of just negativity and just negative stuff everywhere, right? And now we're in a straight capitulation to the upside, essentially, right? Look at these moves. These are not natural moves in the market, okay? Beyond Meat today, 14.5% up. SoFi, 11%. This is just my watch list, okay? Lemonade, 10%. Tesla, 10% move. Tesla's like almost $1 trillion market cap. Like, with Tesla to make a 10% move is nothing short of extraordinary. It's not even like earnings came out or something crazy today, right? Square stock just made a 9.8% move here today, right? By the way, Square is still massively down, and many of these stocks are still massively down. But boy, do we have some money starting to flood in now. That's all I have to say. And this is after a really strong day on Friday, right? Look at Stitch Fix here today, 9.5% up. Voyager Digital, 8.5% up. Honest, 8.5% up. Robinhood, 8.5% up. Fubo, 8% up. These moves are nothing short of extraordinary. These are big moves. Teladoc, 8%. Avant Brands, 8%, which is my favorite stock, under $1, by the way. Alibaba, 8% move. Oh, a 7% move here today. The Chef, a 7% move. Good to see the Chef getting back on the right track as far as the stock price goes. We know the underlying fundamentals of that company are extraordinary, but the stock price has been having a whole lot of trouble, right? Revolve is 6.8%. GoodRx, 6.7%. Purple, the mattress and bedding company, 6.7%. Palantir, 6.7%. Uber, 6%. Now keep in mind, guys, a lot of these moves are nothing compared to what's going to happen in a lot of these stocks over the next 1 to 2 years. That's all I'm going to say about this. Don't get too excited about a move like we're seeing today, because the moves these stocks are going to be on over the next several years is going to make this look like a joke. Like these prices, it's going to be like, really, that company was trading at that price? What a joke, okay? This is one of those videos you definitely save for future years to come back and watch too, because a lot of these stocks, they won't be anywhere near these prices, okay, over time. Smile Direct Club, 5% upward move here today. The Planet, 5% upward move here today. Celsius, 5%. Corsair Gaming, about a 5% move. Might have bought some options in Corsair. I'm going to share that a little later in this video, what stocks I was buying options in, those sorts of things here today. Maxar Technologies, 4.6% move there. Look at PayPal. Might have bought a call option in PayPal first thing this morning. Over a 4% upward move there. Amazon, 3.5%. Skyworks Solutions, 3.3%. The big FB, Meta, as we call it now, Meta, almost a 3% move. Dropbox, 2.8%. And as far as the downside, there's not much downside out there today. There's Pfizer's down, Walgreens down, Sam's down as far as my watch list goes, and Foot Locker slightly down. There's not a whole lot of down. There's just a whole lot of up on a day like today, okay? And so this is just what we just went over there. That's just pure capitulation to the upside. And the funny thing is that's just kind of the start of it, essentially, okay? But yeah, nonetheless, there's a flood of money starting to come in, and a lot of these stocks have started to run out of sellers. I just want to be completely honest. Like, a lot of these stocks have just started to run out of sellers, where they have so much bad news priced into them. They have like earnings misses priced into them. They have like bad news on bad news on bad news. I'll give you a good example of a stock that meets that criteria. Robinhood, for instance. This stock hit a 9-something after hours, after they reported last week. And now it's already almost $14. Robinhood, and I don't really like Robinhood, the stock, right? And I don't like, I'm not just a fan of that one in general, right? But when it comes to Robinhood, the thing you do have to understand is there's so much bad news priced in. And by the way, this stock's already made, if you bought this stock after hours when they reported at 9 something a share, you're already up 40+% on your position in a matter of a few days. Just so, I was trying to explain to people recently in a video that when the market does flip, you're going to see stocks move 20, 30, 40, 50, 60, 70% in a matter of a week or two. We're not talking months. We're not talking years. We're talking a week or two. Like literally, that's how fast it happens when, these stocks are max shorted, through the roof. And all of a sudden you're in a situation where buying pressure comes in and you already have gotten all the sellers out of these stocks is in terms of the ones that, really cared about selling. Obviously you're always going to have some, selling pressure and buying pressure in the market because people want to trade in and out of stocks. But in terms of that massive selling pressure, it starts to dry up once you've gotten everybody out and these stocks have already been down 50, 60, 70, 80%, right? And so you get these moves really quickly. And with a stock like Robinhood, they reported a bad quarter. They reported bad earnings, bad everything. Literally bad everything. There was nothing positive to go off of with Robinhood's earnings, okay? But that stock has been so devastated. It was down like 84+% going into those earnings from its 52-week high that it didn't really matter how bad of earnings Robinhood put up. Everything was a disaster. Everything was trash. But at the end of the day, when the stock price has already been hit so hard, you can't find any more dang sellers in that stock. And here we are. Robinhood, off of a disaster earnings report, is now at 40+%. That's what happens in the market. Sometimes you get these stocks to way overshoot to the upside, and then even if they come in with a good earnings, the stock goes down, and it drives people nuts because they're like, "What? The earnings were good. How's the stock going down?" Well, if the stock's already, everything's been priced in that stock, it's perfection. You got nothing left to go off of, right? And in a Hood's case, it had everything already priced in, a disastrous earnings, and now the stock's moved up 40% in a matter of a few trading days. It's absolutely, nothing short of extraordinary as far as that goes, right? Now, in terms of me, I did buy some call options here first thing this morning. I don't make a lot of call option moves out there, so when I do, it's, I got to see a lot of, ridiculous pricing, which we are certainly in that type of market where we have ridiculous pricing. So I flooded 20,000 in to the options account late last night. Like I think it was technically this morning already at that point. Maybe it was like 2 a.m. or whatever. And I put some orders in. And so basically, the moves I end up making is I bought 10 contracts of Honest. Now, all of these expire in January 2024. Why do I do that? I want to give myself time. Who knows? Maybe that's not the market bottom. Maybe this is just a one-day fake out. Market goes right back down, okay? I always have to be willing to accept that. So I never want to play something super short term. I want to give myself some time to make these things kind of work out, right? And it just become undeniable that these stocks have to move in big ways. So Honest, I bought some Jan 2024s, $5 strikes there. Those got filled at $3 of premium. So basically $8 is my break even on those ones. Once again, January 19, 2024, those expired there. And so if Honest, it moves to $20 to $30 over the next couple of years, like I think it will, there's going to be a lot of money to be made there. The percentages I'll make on that are going to be quite extraordinary. TDCF, I went ahead and bought some $10 strikes there, and I only paid $5 for those. Those expire once again in January 2024 as far as that goes. $15 is my break even on that one. Corsair Gaming, I bought some 1750s. Those got filled at $8 this morning, January 2024, once again there. So break even on this one would be $24.50 essentially there on that one. As far as SDC, so SDC or wait a minute. Sorry, $25.50 on the Corsair. SDC, I bought $2 strikes. I had to pay $1.55 for those. So SDC, they just actually announced very recently that they're pulling back on some of their insane spending in the international markets, which has just been killing their profitability and making their cash flows go, down dramatically. I think this business is going to start to I think they're going to stabilize their cash flows in a massive way, maybe even get their business profitable in the next year or two. And I think when you go from a situation where it was priced for bankruptcy, right? The stock was hitting $1 something recently. It's been priced for bankruptcy and you don't go bankrupt and then you actually get cash flows heading the right way. All of a sudden, the moves for those type of stocks can be hundreds of percent in a matter of 6 or 12 month span. And so I'm willing to take that risk out there, and I bought some strikes there. As far as PayPal, Yeah, PayPal is really attractive recently. 2024 calls on that one expired January 19th. $165 strike there, and I paid $38.50 for those ones as far as that goes. So yeah, I mean, like I said, I don't make very many often. Put 20,000 in some call options. So I've got to see a lot of stuff that I'm finding really, really attractive out there, right? And like I said, I like to give myself time to play with when it comes to these options, because you never know. Even if, and I try to explain this to folks, even if stocks are stupid prices, honestly, it's been trading at $5 to $6 recently. That's stupid, like just purely stupid. But it doesn't mean it can't get even dumber. I mean, what if it goes to 4 or something like that in the short term? That's why I don't go crazy with it. That's why I only do, let's say, $20,000 worth. I don't go, $200,000 worth or $2 million worth or something like that, because at the end of the day, it's a risk. And what if the market just downtrends for the next 2 years or something like that? It's a risk I have to be willing to accept, and that's why I don't go crazy with it. And that's why I buy, a long time into the future here, essentially, okay? Great day for the public account here today. One of the better days it's had recently. It's a multi-6-figure day if you count up all the different accounts. So good to see things kind of back on the right track. Now, in this, I got a lot I want to share now, okay? So you got to stay long. You got to stay focused in this sort of market. And I've been preaching this for the last several weeks, right? The temptation is there to trade, try to get in and out of stocks. You got to avoid this type of stuff like the plague, essentially, okay? You got to avoid it like the plague. When this sort of market, when you have stocks, making these dramatic moves, right? It is very, very tempting to start to want to swing trade, day trade, those sorts of things. Sell out of your account completely, do all these crazy things that you wouldn't usually do, right? And so, you've got to avoid that stuff like the plague. Like, I think the stock market sometimes is a very good representation of life in general, right? Where you have a lot of temptation in life, and you have to try your best to avoid those temptations, or, you're going to set yourself up, because you enjoyed a short-term pleasure, you're going to set yourself up for a lot of long-term pain because of something you enjoyed in the short term, right? And that's the stock market, and a lot of folks want that short-term pleasure of selling out of all their stocks in a tough market because they just continue to lose money. They want the short-term pleasure of trying to time in and out of the market. They want the short-term pleasure of trying to get it right? They want the short-term pleasure of not the pain, and to try to get some semblance of, success. And all these things ultimately just are folks' downfalls in the stock market. And so you got to stay focused in these sorts of markets. You got to avoid the temptation. It's there. I can't deny it. But you got to avoid it like the plague, man. That's the first thing I want to say. Second thing is, the stock market, I've been doing this for 14 years now, and it's kind of like if you have kids, you can relate to this if you have kids, right? So, you say to a kid, be a good boy, you get a lollipop or something like that, right? Because kids are always tempted to do bad stuff or stuff they shouldn't do, get into stuff they shouldn't be getting into and whatnot, right? And, you kind of got to, have something there for them to, incentivize them, to be good or something like that. And I feel like the stock market is kind of like that type of situation. It's like, be a good boy, you're going to make a lot of money, right? But the problem is everybody falls to that temptation of doing short-term stuff to make themselves happy or feel good. Kind of like a kid is very tempted to do something that isn't in their best interest, but they're going to have fun doing it in the short term, being bad, doing something bad, right? And you have to fight that in the end. And the stock market rewards those who are patient. The stock market rewards those who have a plan. And the stock market rewards those that buy the dip. That's just a flat out honest truth. And get into good companies that have great futures in front of themselves. And those folks are rewarded. Not in the short term. You have to go through the short term crap to, get to the long term gains. But as you get through that, you realize, oh man, that lollipop was sure dang worth it in the end. I'm glad I was a good boy. Okay. Now, another thing I've noticed in the stock market over the past 14 years is everybody gets their time to shine in the market. Everybody gets their time to shine. Short sellers even get their time to shine, sometimes. Even recently, short sellers had their time to shine. A lot of these stocks have gone down dramatically. So shorts have had their time to shine. Longs, most of the time, have their time to shine, right? Sometimes value investors have their time to shine, which 2021 was definitely a year where value investors and big tech investors, those ones really did very well. While a lot of folks like myself that were, last 6 months a year, I was loading up on a lot of small caps, growth companies. We didn't have our time to shine, right? It was the values time to shine, and the oil and gas stocks and things like that did really, really well. Big tech, the most boring companies, but they did really well, and they had their time to shine, right? Growth investors, we have our time to shine, and we will have our time to shine in the future, right? And 2020 through the first half of 2021 was definitely a time period for growth investors to shine. And so everybody gets their time to shine in this market. Never laugh at another group, really, because it's just not worth it. Even in a situation where, this market, let's say this market continues on, I'm not going to laugh at short sellers or something like that. They had their time to shine. They had some money to be made out there, right? And they'll have their time to shine in the future. I don't know when it is, but they'll have time periods in the future where they can make a bunch of money as well. And so I don't want to make fun of them or something like that, because a lot of people, when they're having some success in the market, they want to put down other groups of investors, and it's just not worth it, because another group will have their time to shine. I saw a lot of growth investors make fun of value investors, right? When the market was moving up like huge and growth stocks were pumping and like, grandpa and their boring value stocks. And it's like, don't do that crap, man, because value investors will have their time to laugh as well, right? And then I've seen it with value investors recently where like, you kids have been playing around with all those growth stocks. Look at now you're down 50%, 40%, 60%, 70% on those growth stocks from where you were buying. Look what you got. And I said to the value investors, don't laugh at the growth investors, because they will have their day to shine, and their day to shine will be about as bright as the sun. And so, just don't get into that game. It's just a losing game. And everybody gets their time to laugh. Everybody gets their time to, be, I'm great. And, just got to accept that, right? Stay focused on you and kind of what you're doing, right? Now, the next 72 hours is huge, okay? So essentially over the next 72 hours, you got UPS earnings in the morning. You got PayPal earnings after the bell. Google, Facebook, Qualcomm, Amazon. If you want to talk about, here's the thing. I'll just be honest. If those earnings are all strong, guidance is good, this market's not slowing down anytime soon, and we'll continue to have some massive moves up. Now, if all of a sudden those companies all have bad quarters, bad guidance, we can move right back down to where we were just at. It's really going to depend on those earnings. I went kind of more into depth on all those earnings in the video I posted yesterday on the channel. So if you didn't get to see that video yet, definitely check out that video. I went much more in depth into kind of all the earnings and my feelings around them and those sorts of things. But yeah, this next 72 hours is absolutely massive, okay? It's a great time period to take stock market investing serious. If you want to know exactly how to research stocks, how to read financial statements, everything to look for in stocks, those sorts of things, check out Financial Fortress program. That will be the pinned comment down there. If you're looking to join a Discord chat with serious investors and those sorts of things, this is the time period to essentially take the stock market very, very serious. There's a lot of stocks that are devastated right now. We're in a very volatile market. It's the best time to get started. The worst time is when everything's at the moon, everything's at 52-week highs and all-time highs. You want to get in when essentially and take this stuff serious when things are kind of devastated. So if you want to check that out and take your investing to the next level, check out pinned comment down there. Much love as always, and have a great day.